Hello friends, welcome to our next class, stock price changes. In this lesson we will learn about the price changes of the scripts. Generally the stocks moves in the size of a tick which is predefined by the stock exchanges. Okay, why do stock prices move? Basically the stock prices moves based on the demand and the supply available in the market. For example, if we go to the market, sometimes you can observe the cost of the onions is more than the previous month or something. Why it is happening? Because the production of those commodity is very less, but the demand of the consumers is more on that particular point of time, and so the demand has been raised and the price is also be raised. The same will be applicable in the price movements of the stocks even. When we compare into our real life, we can easily understand the movements of these all these prices. Okay, now we'll go more into that. What is the demand? The demand is the uh, point will where the people need is increasing is called a demand. Example, if I need an stock of TCS and you need a stock of Wipro like that, and I have a need of 500 stocks, you have a need of 200 stocks. So if the stock availability in the market is 1000 of TCS and 100 of Wipro, then what will happen is, even though the requirement is 200 stocks but the availability is only 100 stocks, the price of Wipro will move quicker than the price of the TCS, because even though I require 500 stocks but the availability is more than the my requirement. I mean the supply is more when compared to the demand. So it is not related to the price of the moment. I mean the demand and supply price, the more the price of the stock doesn't mean it has having more demand. The demand varies depending upon various factors like performance of the company, the demand of that particular industry, or the growth shown by the particular product of the company, or maybe some foreign investors or some good policies, or the announcement of the government infusing of funds in the banking sectors like that. Any number of newses may infuse the demand. So if the demand is increasing at any point of time and the supply is not matching that particular demand, then the price will automatically moves up. And if there is a less demand and there is more supply, automatically the price goes down. That's what where we can simply say that demand and supply. As explained before, the stock price always moves in tick. What is a tick? Value of a tick changes from the stock to stock. Like in NSE, generally the tick size is 5 paisa. In BSE, it is also generally 5 paisa. But in BSE, if the stock price of any scrip is below 15 rupees on the first trading day of the month, then the tick size will be 1 paisa for that particular month, and they never change it till next trading day of the next month and it will remains uniform. Whereas in NSE it will be generally the 5 paisa for 5 paisa in almost all scripts. So if you can see the price change or price movement in the platform, you can see the price is moving in the multiples of 5 paise. Like you can see 97.55 paise, 97.60 paise, 97.70 paise, like that. Like as I explained, BSE tick size may varies upon the price range of the particular stocks. I hope this clears the why do stock prices changes and how do they change and etc. everything. We can clearly understand the uh, uh, different stock prices changes. You may see in the trading platforms the bid price, ask price, trading volume, etc., etc. that we'll see in the most used jargons class, where I will explain all those topics which will helpful for you in identifying those points. Thank you.